This is London with Bitcoin Spike. We have an important update. Please pay attention. The left-hand side, you're going to see the rising wedge. We've fallen out of it. On the right-hand side, I'm going to walk you through today how to set up the macro logarithmic chart. We're in a very, very important zone. I'm going to tell you that. This is London with Bitcoin Spike, and in terms of setting up the logarithmic chart, it's going to be an important, quick update. I want to make sure all of the VIP and anyone else that you guys are prepared with the exact trend lines in play right now as we break down. First of all, we want to go through, look at this, 578% on a short. What is up, VIP? Way to trade. Look at Liam with a 318%. Liam, way to go, brother. Nice trading from Scotland. That is VIP in the house, guys. Now, in terms of the setup, on the right-hand side, I have the weekly chart. Please follow along. I want you to go in. I want you to add to your watch list. Add to your watch list Bitcoin index. We're going to go through this again. You're going to click on index, okay? Let's say the all-time history index of Bitcoin. That's what I want you to have on your watch list. That will enable you to then go to the weekly time frame. Follow along, guys, and set this up, please. The weekly time frame. Bam, hit it. Then I want you to go on the right-hand side under settings and hit logarithmic. Boom. Hit logarithmic. Why would I want you to do that? Well, let's take a look at, let me make sure that we're on. It took me off logarithmic because I was on there already. So, yes, you want to make sure it is selected. Now, we'll go through downside targets. We'll go through percentage for potential throwback in this area would be brutal. I'm going to tell you a throwback as you look at the left-hand side, a throwback to prior support. Yes, they occur. Guys, they occur. More frequently on some assets other than Bitcoin, with the frequency up to, say, 70%, guys. So mind your short right now. I'll talk about the Bollinger Band, the 20 moving average. But right now, on the right-hand side, since you set this up, what I want to point out is the following, hugely important. And shout out to all the VIP. I see Freddie right now. What's up, Freddie? In terms of the framework here, looking at the logarithmic chart, what the most important aspect is the following. If you look at the lines versus the candle wicks, all right, you'll see, and I want you to snap these to the actual, if you would snap these to the actual wick, the magnet tool on the left. Use it. Snap, okay? Go ahead and affix this to the actual candle wick here in terms of the initiation of your trend line. Affix it to this secondary point here. Bam. Then I want you to very simply just double click on it after you snap that, and you're going to extend the line to the right. What is that going to give you? Let's go through the details. What will that accomplish for you? You will have the exact trend line. Boom. Now, it's important because I want to show you the difference between the blue line. What's the blue line versus the white line that was just set? Very important, guys. Pay attention. Now, the white line that we just established was on the candle wick. Okay, the blue line is above. I did the same feature, the magnet, snap to the price line, snap to the price line. I double clicked, and I want to show you this. I extended the line to the right. What does this give us? Well, it shows you that the specific trend line in blue on the lines, we are outside. We are down and outside of that specific trend line. That's important. This is a macro feature. We're paying attention to the fact that we have a differentiated, an internal and an external trend line. So when you're looking at the specific macro, when we're holding the macro right now on Bitcoin, I want to make sure that you are plugged in. I want to make sure that you understand we're differentiated between the actual lines on the weekly and the candle wicks. Now, as we would look at the specifics here, we have broken down out of a rising wedge. I forecasted that a bit with you guys in terms of that exit move that I did foresee. Now, we do have the target towards the downside. I'm bringing up the framework of this specific trend line on the macro because, guys, we have targets incoming. We have targets incoming. I'm going to tell you guys, in terms of pickups at this lower level, these are crucial pickups. And this area here, to hold on to this area, this is not a standard area. Just to let you know, if we were to capitulate beyond this trend line, guys, we could be looking at some really nicely priced Bitcoin, I'll tell you. And getting there is going to be more than half the battle, I'll tell you that. With some strength in equities, etc., we're going to need some capitulation across the board. But I want you all plugged into this specific trend line also. While it is not excusable, please listen to this. While it's not excusable in terms of a bear flag or in terms of the feature that we have here, you will note that when you're operating along a trend line, and please listen to this, when you're operating along a trend line, a primary trend line, say as part of a channel framework, etc., you will find bear flags, you will find rising wedges, you will find this type of a formulated pattern framework when you're operating along trend lines such as this. So in the entire scope of the history of Bitcoin here, I want to bring to the fact that while I don't necessarily excuse, while I do not excuse the bear flag tendencies, the rising wedge tendencies, I do put it into context and I do understand it. Okay, and if you trade a lot, you'll also understand it in that specific zone to see as we are climbing. And essentially, it's been the price action has been stodgy. It's been pushing up and along and with, including that 200 weekly moving average that we're trying to hold on to now. But I just want to bring to your attention, all VIP, anyone else listening, and especially VIP, that when you're formulating some sort of a pattern like this, it's very common to do so along a line of support in terms of a channel line formation. Very important. Expect that on the macro, yes, also on the micro. So as we look at the features here, yes, I'm going to tell you, technically there's a probability for us to throw back if we would look into this daily time frame. I'll tell you, the bulls are not excited about losing this 200 weekly moving average right now. They're just not. I'll tell you, as a matter of fact, in terms of the features, the fib retracements, that would be the number one go-to plan. I would say if you're looking at accumulating, if you're looking at hitting levels and engaging in some long trades, and it's a bit tricky now to even say, well, I'm just going to get into a short now. The probability of a kickback to prior support is a dangerous potential. I'm going to let you know. Rising wedges are not the favorite patterns to trade. I'm going to tell you, they can get catchy up and over the top of a rising wedge. They can be also almost equally catchy up, not only upside, but also underneath as you look at any potential recoup move to reconfirm prior support as a resistance move. So what I'll tell you is the following. Looking at the lower side targets here at first blush, just for us to say, well, looking at the bottom of the specific wedge formation, 19,300. Well, that's our target. I'll tell you guys, there's a 60 to a 65% chance that we would get to that. These are not exceptional performers. Rising wedges are not exceptional performers. The actual percentage is about 63% of your rising wedges are going to complete back to this level. So it's greater than 50%, but it's not a deadlock on, yes, this is the target, we're going right here. Just so that you know, so that you can put that into context. So I wanted to bring you the details on the logarithmic in terms of the variation of the candle wicks to the actual lines. Make sure that you appreciate the fact that we're down and below the line. Big deal, guys. It's a big deal. However, I do always say, guys, 2022, check the candle wicks. So we're still maintaining this level. And the good thing about that secondary line, that external, line, is that we're looking at some nice pickups in this zone incoming. So that would require, guys, us to delve a bit deeper into these Fibonacci's. I'm going to say one thing that I was looking at, me personally, before deploying some cash in at this 200 200 weekly moving average. Something I backed off of was the fact that this 20 moving average in pink on the daily, right? The 20 moving average in pink, that's on the Bollinger Band. Now, New York Institute of Finance, I appreciate your time today. We're working into a weekend. We hope we can get to stream. That will be great, guys, this weekend. If I'm feeling up to it, we'll definitely do that. In terms of the 20 moving average, once we capitulate beyond, set a candle on the other side, let's say we're operating along the top and using the 20 as a level of support, right? We'd like to always recognize when we set a candle through or underneath the 20 moving average, and the trade tactic of the New York Institute of Finance, recognized by the New York Institute of Finance, is once a candle is set underneath this specific midline moving average, that 20 moving average, this is on the daily, okay, then the opposite band would become the target. That is the strategy that we recognize. We keep an eye on it. So in terms of the fallout feature here, targeting towards this downside band, 22,400. I just wanted to bring that to your attention right now. Yes, set a candle on the other side, and I would say it depends on what type of a candle you set. If you're into candles, you may want to start paying more attention to them because they can definitely be a good source or a good guide. For instance, a preceding hammer in this level. A hammer in this level set on the other side of the 20 moving average is an indication, bam, actually we could head back to the upside instead of completing the specific target to the downside of this downside band once we set on the other side of it. So just another strategy, a tactic for you to deploy. It's never going to be simple. You guys know that. What I would say right now in terms of in terms of the strategy, in terms of the pickup, we are down and out of a pretty dangerous pattern. I'll say that, a pretty dangerous pattern in terms of the rising wedge feature. There's nothing wrong with not wanting to compromise. If you're in profits, guys, enjoy your profits. Shout out to Kenny. I know that you're in profits. I know a lot of VIP are in profits as well with you, Kenny. And it's just nice to hear, well, hey, this weekend I want to enjoy the profits. I want to make sure that maybe you're not caught up in this melee here, because it can be unpredictable to say the least. I'm going to be zooming out myself. I want to be looking for a stronger, heavier entry along, most likely this white line would be a nice zone for me to really give some heavier contemplation towards a heavier entry. In the meantime, of course, we'll continue to trade. This is London with Bitcoin Spike. Wanted to bring you just this update, and I want to shout out again to Leon. Way to trade, my man, 318%. That is huge. 578%, just to let you know. That's my trade. And what was that? Just so that we know, just so that you know how the trades get going. In terms of a potential, I'd say, where was the entry? In this zone, I believe that. Yeah, I believe that, guys. In terms of just referencing back to VIP, as I recall, that was just the breakdown of this specific move. If we were looking at kind of this head and shoulders variation, could be an Adam and an Eve, it could be a double top clearly, or a triple top even, but looking at the framework here, just to let you know how that large of a trade comes together. It's on leverage, first of all, and it was just the breakdown, very simply put, the breakdown of this specific head and shoulders. A little bit of defect between the left shoulder head and right shoulder. We would prefer these to be balanced on a nice head and shoulders. However, it's not a disqualifying feature to have a higher left shoulder than a right shoulder. So yeah, that was the trade that I'm in, the short that I'm currently in, bam, to the downside. I'll just encourage you, please, guys, buy at support, sell at resistance, or long at support and short at resistance. You know that. Trade your patterns and hit your targets. We're looking forward to a great 2022. Congratulations to VIP. If we can get the price down into and sub, I'm going to say into the 20K and sub 20K, we are going to be excited. Bottom line, I want to invite you to join our VIP trading consistently. Liam, way to go, way to trade. Anyone else I missed on the trades today, it will not be forgotten. forgotten, and I will remember you and do a special piece on you, I promise. This link here will allow you to join VIP. Once you join the top level membership, put I am VIP. Boom, in the first pinned tweet, that'll get you in touch with me. I'll put you in the back in the winner's circle, and we will get busy like we are every single day trading, going through New York Institute of Finance, going through, for instance, MACD, going through the presentation, the materials, the guys, just the teamwork that we need to stay on top of the market. This is London with Bitcoin Spike. Looking forward to an awesome weekend. Guys, take care of yourself, and we'll talk soon. Let's trade, and watch it, guys. If you're looking to enter into a short right now, I'd be careful. Watch those whipsaws. This is London with Bitcoin Spike.